I'm gonna start recording now. That's me hard at work, eh? That's pretty interesting. I've added 2 more monitors to this right behind me here. So this is an older picture, but this is pretty much my setup. Just so you guys know, it's pretty straightforward. Got my 5-minute chart on the left, my chat, my news, and everything and another chart for my VPS in the middle 4 screens, and then on the right screen is yeah, I know. Oh, you're still on the welcome screen. Yeah, I'm just showing the screen of me and explaining what let me just hang on here. Somebody might want to join here. So I'm just showing you that's me. Anyways, so I have I have here over here on my right. I don't know if you can see my mouse moving. Can you see my mouse moving? Yeah. Yeah, I think so. Over here, so up here and above these 2, there's another 2 monitors. Then this monitor on the left is my 5-minute monitor. This one on the right here is 15, 30, 1 hour, 4 hour, and sometimes daily. I'll change it. So I do my chatting on this one here. I watch my VPS on this one right here to make sure that everything is all orders are taken trades, and the 2 up here primarily are just news. So that's we don't need to know enough about me, but these are my tools that I use for my scalping. The indicators that I use are the moving averages to determine the trend and fine-tune my entries. Candlesticks and inside bars in particular. Stochastics and RSI are both used just for confirmation. Psychological numbers, big numbers, and fractals. Those are the key tools that I use in my trading. Let's see if I'm doing this right. All right, and these are what my settings are for my moving averages. The 180 lineal weight, shift 1 MA. That equals the 30-minute 30 EMA on a 5-minute chart. So when you're looking at a 5-minute chart, you know what a 30-minute chart is looking like with that 30-minute EMA that we show on our chart. And the 90 lineal weight shows shift 1 MA. It shows the 30-minute chart, 30 EMA, sorry, on a 15-minute chart, but it's showing it on my 5-minute chart. These settings allow us to see the trend on the higher time frames without flipping back and forth between the charts. So that's the native to the chart. We use the 30 EMA and the 10 EMA. Those are the 2 pair that I use for doing my confirmation of entries. I guess hopefully you guys see that and understand what I said there. The stochastics, very simple. Stochastics is setting at 833 with levels of 68 and 32. These are used for confirmation when of overbought and oversold territories, depending on the trend, obviously, of where we are. If we're in a downtrend, we would like to see it coming off of the 68, and we would like it coming off the 32 if we're in an upward trend. We will take trades in and around the 50 if it's retraced and come back up from the 32 to the 50 and has turned around and come back down. The RSI settings is very standard setting, 30, with a level setting of 50. Again, just use these for confirmation. If it's below 50 and everything else is in order, we like to look at shorts. If it's above 50, then we'll look at longs. Big numbers, these are psychological numbers, 0, 25, 50, 75. Those are acting as support and resistance levels. If you look at your charts, you'll often see that zeros and 50s are very well respected for resistance, and 25 and 75 as well, and also support. Both they will bounce around those numbers. So if you're looking to take a trade close to one of those numbers, you need to be aware that there could be some resistance at that level. Fractals shown are on my charts are the gray boxes. Basically, they're just a 5-point fractal. If you guys aren't really aware of how fractals are made, you need to have two candles going up, a higher high, to the third candle, which is a higher high, and then it must create two candles coming down, a higher low and then a lower low. That creates a high fractal, and the reverse goes for the lower fractal. You're going down, you got a lower low, then the lowest low made, and then a higher low, and then a higher high. That creates a fractal. Basically like your hands, exactly. 5 fingers, the middle one is always the beginning of the fractal. Exactly. But it could go more than 5. It could, because it didn't create a higher high inside that fractal. It could continue for up to 7 bars, 9 bars, until the full 5 has been met. Then that creates that swing high or swing low. All right, so you'll see that on some charts here. This is what my basic chart looks like. Very simple, very, very basic chart. Hi, Dennis. How are you?
Good.
Good. So this is what my basic chart looks like. I have my signal candles here, and I have my moving averages and my Ames box, which is creating the higher high, the fractals. So higher highs, higher lows. These are my big numbers here. I know it seems a little fuzzy and can't really see it, but it's there. That's zeros. So that acts as like a resistance. It bounced off of it, came back up, and then broke through. Down here in the bottom is my stochastics. It's a colored stochastics, and it changes in there. And then the RSI, which is the black line. So that's what my basic chart looks like. All right, I have up here in the right-hand corner what the, oops, lost my mouse here for a second. The spread right up here, and what the daily range is, and the previous day's range. So that's what my basic chart looks like. Basic rules of entry. Number 1, trade with the trend only. Follow direction of the moving averages. Best entries are when all moving averages are on a slope together in the same direction, i.e. the 10 MA above the 30 MA, the 10 and the 30 above the 90, the 10, the 30, and the 90 above the 180. Those are the basic rules. All right, and there's a chart that coming up here that shows basically, I didn't mention the 200, but I do carry the 200 on my charts. Roger doesn't carry them on his, but Uh, you guys still hear me okay?
Mm-hmm.
Okay, good. So those are my that's my standard moving averages, and I am recording this, so I will pass it on. This is primarily what an inside bar looks like. And for those that don't know what an inside bar, that's the inside bar. The inside bar is a bar that is created inside the previous bar. And when you're looking to take a break of an inside bar, you get the signal here of the inside bar. When this candle is being formed, and as it's being formed, if it breaks below the bottom of this candle, that's your entry. You don't wait for this candle to finish. That's your entry at the bottom once it breaks the bottom of this candle here. That's an inside bar. Let's see here. My, basically wait for the signal. Then on the next bar, if the candle is formed, then breaks the signal candle, and all other factors are in play, then and only then do you take the trade. So make sure the trend is there, number one. Wait for your signal, number two. Wait for the break, number three. And as soon as you get the break, you take the entry, number four. All right, and this is a signal bar here. This one right here, this is a signal bar. All right, we had a signal, and this candle broke. I tried to do this trade live and take pictures as I was doing it so that I could put it in my slideshow here. There it is. It broke. Hang on. Boom. That's the next candle. I'm in the trade. You can see the trade entry right here. And let's go to the next one. Boom. So my take profit would be at the bottom of this box. Let's see here. Next slide. Boom. Come. There it is. There's my entry. There's my exit. Basically the bottom of the box, but because I was trying to take the picture, snap a shot, and do everything, I got a small pullback on it, and I only got, I think, 3 pips on that one. That was the exit. So these were recent trades that I had taken. Here's a trade right here. All moving averages are in order. My stochastics coming down off the top. My RSI is below 50. It's an inside bar with a signal. There's my entry. There's my exit. All right, it's inside the box. So we're trading inside the fractal box. We don't take the trade when it's outside the box. All right, there's another one here. Right here. There's my entry. My exit is in there somewhere. Oh, there's the exit there. All right. Let's see. I'll go to another one. This one was a losing trade that I had. Okay, and the reason I showed this one here is because I didn't wait. It was an upwards trend. I was all excited. I hopped in here where I should have been hopping in down here. So my stochastics hadn't confirmed to be oversold. Therefore, the trade was not a valid trade, and I got stopped out. There's another trade here off the 50, comes down. RSI is good. There's my entry. Boom, I'm in and I'm out. You guys can see these okay? Yes, no? Everybody, somebody say yes, somebody say no.
I can see him play.
Okay.
Good.
All right. Cool. Cool. Here's a couple of trades I took. These were all done on Thursday. These were trades I did on Thursday just before going to my meeting. I posted all of these trades actually in the room as well. So, and there's another losing trade here because I did have two losers that day. And the reason this one lost was because, again, this wasn't 100% ready. My moving averages had all tightened up into a circle here, and so I got stopped out right there. There's a trade right here. I don't know if you can see it. It's an inside bar and a signal trade. I took the inside bar. Boom, there it is. And then there's another trade here, an inside bar right here. I took it and got out right there. So I was out of the first trade, and then I got a signal for an inside bar, so I hopped back in on it, grabbed another one. And here's another trade here. And another trade. Okay, so I am showing some losers, and I gotta run, Dennis. See you later, guys. All right. I'll record. I'm recording this, Dennis, so I'll post it. Don't worry. So I'm just showing you some of the stuff that I showed to my my group. In closing, what I did there was find the best trading style that's for you. Set a reasonable goal per day and stop. You know, that's important. Like if you keep trading and trading and trading, you could overtrade yourself and give back your money. And I see it time and time and time again, all the time. So you always have to set a reasonable goal, and screen time is your best resource. You will never, and you should never jump from system to system to system. Sometimes a good system can take upwards of 4 to 5 years to truly get it. I posted in the room the other day the 5 steps of trading, and that to me was a very I've read it several times, and it's a very good read, and you guys should read it over and over and over again, because if you think you're going to get rich the very first week, the very first month, the very first year, all likelihood is you're only fooling yourself. It takes time, it takes practice, it takes discipline, and it takes lots and lots of emotional trading. You have to train yourself emotionally to be non-emotional. I don't know if that makes sense, but I hope it does. All right, so let's. I'm gonna hop over to my change. I'm gonna hop over to me now, and I'm gonna show my screen here. There we go. Is your take profit, sorry, I didn't catch that, 1 second, it's James, it says here, is your take profits always the area inside the box? James, I might be a little different than, I trade a little, I don't trade a little different than Roger. I don't like to give money back. I trade a full lot, and if I'm up 3 pips, which is $30, I'm happy. You know, if I make $30 in 5 minutes, that's a good paycheck. All right, so you know, 3 to 5 is a really conservative number, because you know, Roger sometimes, or Roger shoots for, you know, 5 to 10, but we'll take 3 65% of the time, because he'll be watching and looking for consolidation, or sorry about that. You know, so he doesn't want to give it back either, but you know, primarily my goal is simple. You know, if it's 5 pips a day, or sorry, 5 pips a trade, and I take you know, on average 20 trades, you know, that's 100 pips. That's a good day. That's a great day, actually. So, you know, and you know, you might have 1 or 2 losers in there, and then you end up with 30 pips, 40 pips, 50 pips. Again, still, it's a great day. I don't normally have a loss of 15. I will have a loss of 12 pips on a trade, a loss of 10. I will look for outs. As like I'm looking at this chart here. Okay, there's my signal trade right here. Okay, my out is on this one here is a swing high, so it's 6 pips. Okay. Well, whatever you wait for, you wait for. But I'm just showing you what it is that we do. Okay. I mean, I appreciate that you wait for the break of the 10 in the other direction, and if that works for you, that's great. All right. It's just that if I'm in profit, I'll take my profit and get out. Okay. So there's another signal here. So is my stop loss on this one. 20 is too high for me. So I'm going to look, you know, at probably this swing low here, or this swing low here. So 15 or 16. But again, I'm out before it happens. This fractal wasn't created yet, so you know, I might not even enter this trade because it's right at the bottom of the box. Because this wasn't created, this fractal here wasn't created yet at that point in time. So if it's at the bottom of the box, my likelihood is I would probably won't take the trade. I'll also measure the candle. Okay, that candle's 15 pips long, and you know, if you go back and you look, most of the candles in here are 10 or 12, and then they get some exhaustion happening here. So you know, you have to understand price action, and you really have to look at it to see, you know, how big is the candle, where is it going, what are you looking to achieve? All right. I don't trade in consolidation, so this is looking like consolidation to me. So this is the wrong time of day as well. I don't trade after London close, period. But I'm just showing you this. So do you have a chart that you'd like me to show you? A pair. EU. Everybody likes the EU. Okay, so let me do this. Let me go back on the EU. I'm going to go back a couple of days. All right, let's see what we have here. Oops. Refresh. All right, so this is New York midnight. So, and I'm going to F12 my screen. I don't trade New York midnight, so I'm not in that trade. I don't start. Oh, here I got to adjust something here. 15 and then back to 5. Okay. London Open. Okay, I'm in around now and I'm looking at the charts. I don't normally still trade at this point in time, but if you look, if what I'm looking for here is moving averages and also what it's been doing. So here on my screen I see that the trend has been down on this day since before midnight. So we're looking for shorts. All right. There is no trade here because the moving averages, the two main moving averages, the 10 and the 30, are not in the right order. All right. So we have a cross of the moving averages. So now we need to be looking for shorts. The only concern that I have here with any shorts is I'm looking to make sure my stochastics is up around the 68 to 70 mark, which it's not. So we have an inside bar here. This inside bar. At this point in time, this fractal has been created. So it's there. I got lots of room to go from there to the bottom, but the problem is this inside bar is a great signal. All my moving averages are in order. My stop, my stop would probably be 10 pips away, but my stochastics is still coming up from the bottom. So, but my RSI, so everything is not in order here. So I wouldn't take this trade. Okay, but the most important reason not to take it is, let's see, it didn't break yet. All right, so now my stochastic is still moving upwards. All right, I'm still not into this trade. All right, all my moving averages are nicely pointing the right direction. They're pointing roughly 4 o'clock. My 30 and my 10 are separating a little bit. My 10 is pointing towards 5, but everything is not in order. So I'm gonna hold on taking that trade. All right, I have another inside bar here. All right, I know I'd be really tempted to take it, but my stochastic is still coming up from the bottom. RSI is still below 50, so that's good. Okay, but now my 10 is flattening out on this candle. I can see it flattening out. So it could end up crossing and going north again. But I don't know. So, and this fractal is the high, this fractal is the low, so I don't know. So personally, I'm not in the trade. Okay, now I have a signal. All right, and again, but I'm looking at my stochastics is still moving up, which is a good sign for shorts, because it's going to give me a positive trade. I don't have a break. My 10 is flattening, my 30 is flattening, and all the rest of my moving averages are pointing down. I still don't have a trade. All right, my stock has moved up to 60. I'm waiting for it to curl down now, turn red and curl down. And at that point in time, once it breaks, I'm in the I'll go into that trade. Okay. Oh, no trade. No trade yet. It didn't break. Okay, so there's my signal candle here. 1, 2, 3. It's a no trade. I don't trade on the next candle. All right. Moving averages are tightening up. I don't trade. Okay. And that's a good thing I didn't take the trade. It didn't, no break, no trade. It didn't break. After 3 candles, no trade. And let's see what happens. All right, now I have turnover of my stochastics has turned red. Yes, stochastics needs to be above 68. It come up off the 80. That came down, it turned red. My RSI is below 50. I have a signal and an inside bar. That's a pretty solid. So if this one breaks, I will be in the trade. My stop loss, I'm going to count it. Okay, 4 pips. That's really not enough for a stop loss. So it would be the next big number, which roughly right there. So 11 pips. My take profit 3 to 5, but I could go as much as 10. So let's see. I'm in the trade. Oh, I actually took this one. There you go. I took this trade. And I'm out of that trade. What did I get there? Oh, I got 4 pips. All right. You see the trade? All right, let's move on. I don't care now that it's gone all the way down to here. See, there's where my original take profit was. Exactly all, sorry, what did I say? Better to be, yeah. Exactly, I agree with you. You said here, all the small ones add up to a nice bar, a nice inside bar. Go ahead, sorry. Okay, hello? Who just showed up? Somebody just showed up. All right, so all right, so let's just keep moving on here. Oh, I got an echo. There we go. Echo gone. I don't know who that was. All right, so moving on to the next trade. No entry, no entry. Tokyo close. I have an inside bar here. It's in the squeeze. It's in all of my moving averages. It's outside the box. See here, this box is not created. It's outside the box. Therefore, it's a no trade. Okay, we're now creating. We're now creating a new fractal high here. All right. And but we also are creating a crossover of the moving averages. If you look at the other moving averages, the 90 is now flattening out. All right, so it's pointing at 3 o'clock. The 180 is pointing at about 3:30. That's telling me that the market is starting to turn around, and it could start to go sideways or long. So I'm going to be very careful in some of my trades now. All right, I have another inside bar. Okay, and all right, so as you see here, I got a crossover. I'm not interested in this trade. And boom. You see how I said that the moving averages had showed me to stay out of that trade? My moving averages were flattening out. So this moving average right now is pointing at 3 o'clock. 3 o'clock. My other moving averages have crossed over and have gone up. I'm still looking for long term. I'm looking for shorts. I have an inside bar here. All right. And I have nothing to trade at the moment. All right. We had an inside bar long here, but again, it's against most of the moving averages. You know, obviously, if you'd have taken it, you could see that it would have been a successful trade. However, it's not what we're not doing counter trend trades. So, all right. So now we're looking at, my 90. They're still not in everything. Is still not in order. All right, it looks like we got a big news candle there. Yep. I didn't take the trade, so that was a huge news candle. There it is there. New York open. Okay, we have a signal here. All right, there's our signal. So we are looking for, we can have a stop of 12. Stochastics is not correct. RSI is right. We don't have a break. Our moving averages are still all in order. They're starting to separate, starting to point downwards a little bit more. Let's see if we get a break. Okay, we get a break, but we shouldn't be in this trade. Okay, it's a riskier trade. You could take it, but it's a riskier trade because our stochastics is not confirming the trade. If everything doesn't confirm the trade, if you're looking for what I call the golden goose trades, which are my yellow arrow trades, those trades there are everything is in order. Everything is in order. If you look here, RSI below, stochastics came down. Okay, RSI below, stochastics is below. Stochastics came down, RSI is below. These are all my golden trades. This one here obviously didn't trade because it didn't break. So I didn't take the trade. But, you could have taken that trade and you would have been successful. All right. But personally, especially for new people, we want to make sure everything is in order before you start taking riskier trades. All right. And don't worry if a trade goes by, okay? There's lots of trades to be had in the course of a day. All right. Now I'm going to go back one here. Now when I see this bar here and this bar right here, I didn't break. I'm going to look at that because I'm going to look to see when it's closed up and above, and now I'm assuming that I'm going to at some point in time I'm going to get a signal bar down if the trend continues to stay down because it's closed above my 10. So when I'm flipping through my charts, I see that and say, okay, euro dollar might give me another short signal soon. All right, and it didn't here. There it is there. Okay, everything is in order. All my moving averages are in order. My 10 is curled down. My 30 is at 3 o'clock. It's a bit of a risky trade. All right, but I got everything is in confirmation here. All right, my stop is going to be 14 pips away, swing high. Let's see what happens. I'm in the trade right here. I'm looking for 3 to 5. I would have got 3 on that candle. Boom. Successful trade. I didn't take this trade because I was Thursday and I was trying to get prepared for my my live webinar that I did. Okay. There's another entry here. Okay. There's an entry. Your stop loss on this entry would be roughly 10, 11 pips. All right. You only have 1 pip, 2 pips to your swing low. Okay. That's okay. You might get it. Well, the yellow lines are just what I call the wiggle. They represent the 45-minute, the 50-minute, and the 55-minute candle of the hour. We normally suggest that you do not trade within that time frame because that's when the big banks are deciding which way they're going to try and send the market for the next hour, if that makes sense. So I just had that put into my indicator to show me those candles. Okay, so here's that trade. We didn't get a break. Oh, I was explaining this trade. Stochastics isn't where it needs to be. So this is a risky trade. It might be a good trade, but it's a risky trade in my mind. Especially, boom, but it could have been, there it is. And we're now coming up to London close, so we won't be trading anymore. So that is the 5th. So in here we had really on this pair we only had 3 valid trades from 2 valid trades from London open to London close, signal trades and inside bar trades, and that was on Thursday. Any other pairs you want me to look at? Pound dollar. All right, let's go to the pound dollar. And let's shut this off. And let's go back. And refresh. That's midnight there. Sorry, pardon me. Come on. Oh, there we are. Tokyo. All right, so New York midnight. We don't trade it. But I mean, even if you did trade, you could see here, even though it took some time, the perfect order trades were good. This was, but there's no volume here, so they're really not good for. Okay, so that was good for 3. This one here, if you'd have gotten in on this one here, you'd have had to wait forever to get your 3. 23 candles. 30 candles to get your 3. But so we need volume, for this to really, you don't want to sit in trades long. Not when you're only looking for 3 or 4 pips, 5 pips. All right, so we're moving forward to the time that I like to trade, which is London Open. I'm going to go to which is right here. All right, so I'm looking for shorts at the moment, except my moving averages are crossed over. So I've had an up climb here and a down. So if I was to look at it from New York midnight, I'm really only looking for longs actually, because of all my moving averages, my 190 or my 180 and they're all above. So so they're really not in perfect order. So okay, so here we are. Tokyo, nothing. You can take these 2 moving averages, the 90 and the 180, are reversed from each other. You could take the trades still in short direction, but again, it's better if everything is in order. If all moving averages are in order. All right, so and and your stochastics is not in oversold territory. It's down near the 32. So these are riskier trades for you to take. So I'd be very leery on taking some of those trades. All right. All right, so here we have, a trade right here. Now this fractal isn't created yet because the next one will create it. But so we'd be looking for shorts. We'd be looking for 5 pips, stop loss, 12 pips. All right. If we get a break here, everything is in order. The only two moving averages that are upside down right now are my 90 and my 180, but I'm below my 200. It's a riskier trade, but I might be interested in it if it breaks. It didn't break. All right, I have an inside bar now, and sorry, what was that, James? Yes. Depending, it's top of the box, and unfortunately, when you go back, it could be a big number. So wherever the big number is, 25, which is right about here somewhere. You can see that 25 was a relatively responsive stop here. So that acts as my resistance here. But normally you'd be looking at the swing highs, which is the box, the swing lows, where you take profits. All right, it didn't break, so it's a no trade. Okay, we have a signal here. It's at the bottom of the box. Okay, it might go down to the next swing low. All right, two moving averages still not in order. So again, it's a riskier trade. But let's see what we no trade yet. We have an inside bar. No trade. We now have a signal here, measured to the bottom of the box. We only have 1 pip. RSI is below, but our stochastics is really not in order. So, and we finally have a start of a cross on the 180 to the 90. So, it's a risky trade, but there's a valid entry. 3 to 5 pips. You'd be looking to go down here. Mark it if you want, but we'll just take a look. Okay, you see how the stochastics not being an oversold territory, overbought territory is important. All right, you see, if you'd have gotten in that trade, you'd only be 1.4, and you'd be 5 pips in the rear right now. All right, and so your stop loss should be right around here, because that's a big number. 25 right there. 75 actually is there. All right, so F12 inside bar. We have a signal, 68. No. Nearest to the, okay, I explained this a few times to you, James. Okay, stop loss. Stop losses are swing highs, big numbers, and support and resistance levels. Like if you see a double top or a double bottom or these wicks right here, there's 3 times that hit the same spot. 4 times that hit the same spot. That to me tells me resistance. That's just me looking at the chart. Tells me that I need to understand that area that I could have some support or I could have some resistance at that level. All right. Obviously you don't want to, if you're looking over here and you got an entry here, you don't want to be looking at the top of that box. Pardon me. That's 20 pips away. So that's too far to go. So you're looking for, over here somewhere, you're looking for double tops, double bottoms, other fractals, like right here. So you'll be looking at right there. That would be a reasonable stop, which is 75. So there's a big number stop right there, right? That's a very, it stopped there. It wouldn't go through. It finally came up to it and came back down to it and stopped there. It went up, came back down, stopped there. Came back up, went through it, came back up, is trying to break it again. Couldn't do it. Came back down. Big numbers are very, very, very important. All right, so let's see. Should we be getting in this trade? Looks like it would be a good trade to get into. Let's see. We have a break. We have an entry. Okay, we only have one, so we're 5. Okay, but our stochastics really didn't come. Well, it did. It's there. We shouldn't be trading inside the wiggle, but we did. I took that trade. That's why I didn't take it on the chart. Obviously, it'd be showing. But boom, there you go. There's your trade. If you had taken it. Okay. Boom, you're in. Now you have another signal here, but your stochastics is now going back down to the bottom. So, it becomes a riskier trade to take that entry. It could be a valid entry. And there it is. You've got it again if you wanted it. There's 6 pips there. You have an inside bar here. Okay, everything is kind of down low here. All right. I'm going to be leery to take this trade. It might be successful. You don't know. Well, no trade. You got a break there, but to me it's still a no trade. Well, it would have been a good entry. There's your 3 to 5. But see, what I'm trying to get at is that some of these trades, you'll need to practice and practice and practice some of them to be. But you should only be taking the perfect trades at first until you can start seeing some of the other trades and the riskier trades. And you're looking for support and resistance and price action to take those trades. Okay. Personally, I probably would have taken that inside bar because I know that in the wiggle, an inside bar is a very valuable tool to me. But it's not something that a new person really should worry themselves with until there's trades that I take that I'm more than happy to explain once you've become proficient with the very basics. Take the trades that are reasonable and responsible, and then once you've got a good handle on all of those, then start taking some of the other trades. Okay. It's been about an hour, I think. Unless if there's more questions. So your entry should come. Sorry, let me read that. It says your entry should come when stochastics is above 68 on shorts. Yes. Yes, it should be. Okay. Any other questions? And no entries if outside the box. Um, you should not trade if it's outside the box. Not saying that I don't. I have. Okay, but again, the longer that you trade the setups, then you'll understand the characteristics of the box. You'll understand the characteristics of the signals and the characteristics of price action, and that will help you to take other trades once you get it. Keep it simple. Keep it simple at first. Okay? All right. Everything looks clear now for me. Okay, good. Good. Well, I wish you guys all the best success for trading. I love trading this system. I love trading it with you guys. And let's just you can send me questions if you have questions. You can call me. But what if this then you don't take the trade? If the RSI is above 50, don't take the trade. If your stochastics is below 50, don't take the trade. For shorts. If your stochastics is below 50 and going north, and your RSI is above 50, and all your moving averages in order for going longs, and you get a signal, take the trades long. Okay, I mean it only gets as convoluted and as difficult as you want to make it. Okay, the rules there's not that many rules. It's very simple. Understand price action. How many trades, how many signals are you getting in a day? Well, if you go back and you check your charts, I trade 17 pair. I probably only take about 30 trades out of about maybe 100 signals. Go back and look at it. The charts will tell you. The charts will tell you what the signals are. And if you know how to, if you don't know how to do F12 moves it candle by candle. So when you're going back and you set it up on the chart, F12 moves it candle by candle so that you can. It is Forex majors. Okay. I didn't understand your question. Sorry. Sorry. Is it Forex majors? Well, you see the pairs that I trade right here at the bottom of my screen. From this pair, this is my trade copier. So from this pair back this way. So the AU, ACAD, AJ, I got AU there again. AZ, Euro Audi, EuroCAD, Eurodollar, Euro Yen, Pound Audi, Pound Dollar, Pound New Zealand, Pound Yen, New Zealand Dollar, New Zealand Yen, UCAD, UJ. Those are the pairs that I trade. All right. Anyways, I think I'm done. unless there's anything else that you guys really need, I'm done for now. I will convert this and post it. Okay? It's been great. If you guys have any questions, just send me a message or post it in the room, all right? Because it's important if you post it in the room for everybody to learn. All right. Again, it's a very simple setup, very simple system. You don't need to alter it. You don't need to change it. You just need to learn it. Bye for now.